very good evening and a warm welcome to Personal Finance. I'm Kukuletu Tsele. When buying your household or car insurance, there's a lot to consider. Willem Smith, the Managing Director of Hollard's Personal Lines Divisions, joins me now for more insight. Willem, thank you so much for joining us this evening. You're going to demystify everything that is household and car insurance, but maybe let's come to the discussion regarding household insurance. It's a form of short-term insurance, but what I've noticed is that there's a confusion usually which arises between household insurance and homeowners insurance. What's the difference between the two?
Hi there. The difference really is the homeowners insurance is your structure. So the physical structure of the house, that's homeowners, and then household insurance is really all the stuff that's in your house. So your TV, your bed, your cabinet, everything that's inside the home. And you're quite right, there's a bit of confusion around those because those are more insurance terminologies.
Exactly, it comes down to the terminology. What are some of the nitty-gritties then one needs to know before getting household insurance?
So I think firstly, quite important, the moment you start buying assets is when you really need to start thinking about insurance.
Is my bed one?
Your bed is definitely an asset. There are beds of different sizes and different prices. And your TV would be, and also in your house itself, especially if you have a bond, you can imagine if the house burns down and you don't have insurance on the house, then that's a massive financial burden on you as an individual, which could bankrupt you. So insurance is really important to take out to cover you in the event of really bad things happening, catastrophes happening.
Maybe if you can walk us through the process of actually acquiring some kind of household insurance. So you're buying your assets, which you'd probably do, one item a month, especially if you've just recently moved into a new home. That initial quote, when you're actually looking out for it, what are the nitty-gritties of the details that you need to install there?
So it's quite important to get a few quotations. And you can decide, do you want to use an intermediary, a broker, or do you want to go direct to one of the direct insurers that's out in the market? So at Hollard we offer many choices, but what you then do is you get a quotation, and I think most importantly is look at the policy details. Read the policy documentation. Many people get a quote and they look at only the price and they don't see the finer details about this is covered and that's not covered. And you have to have a house as an example, so your content itself, the stuff that's in your house. It is very good to make a list, take pictures of what you have in each room, and then assign a value to each item. You'll be amazed on how much the things in your home is worth, and you just think it's an old carpet or an old piece of furniture that's standing there.
Tell us about the determination of the value. Does it mean I need to go back to the receipts where I initially purchased these particular items and submit that as proof to the insurance company, or is there a market value that's attached to it?
You don't need to. You don't need to show proof of the receipts to your insurer, but you need to give a value of how much your content in your home is. So the market value determination is the easiest. So go online. You can go onto any of the big shopping online centers. Just have a look at what things cost and what it would cost to replace, and that will give you an indicative value of how much content, how much stuff you have in your home. And then tell your insurer that that's the amount that I want to be insured for, and then obviously your insurer will attach a price to that amount. What's really important though is once you've got an amount, I would keep, even if it's not a receipt, but a picture or some proof of the item that I had, because it's really at claim stage when it becomes problematic. So let's say, for instance, I say I had a specific television set and it was stolen, but I can't really prove that it was that make or model. Then it's very difficult for the insurer to determine that that piece of item really belonged to you. So you don't have to keep the invoice, but the remotes would do, or any of the documentation or booklets that came with the TV would do, because that gives some view of the value that you had in your home.
I want us to touch on the risk profile, which you alluded to a moment ago, because obviously with the terms and conditions, you might need to have increased security measures in order to ensure that your items can be covered quite efficiently. And also maybe there might be restrictions as to how often your goods might be able to move inside and outside of the home. If you can elaborate on the risk profile.
So insurers generally look at a couple of things when they determine an individual's risk profile. So the area in which you live is quite important. Because again, if you live in a very, very high crime area, then you will be insured, but the price might be more. You need to make sure that you specify that you have burglar proofing, and if not, that's fine. But again, the risk is increased, so the price increases. If you have security gates, it helps. If there's a security business in your area that looks after the security in the area, that also helps. That brings down the risk profile. And then also the amount of doors that you have, how many outside doors do you have, also determines the premium. So those are all important items that determines your premium when you look for insurance. Your homeowners and your content insurance, your age is not, that has no influence on the price, and I'm pretty sure we'll speak about motor insurance a little bit later.
Exactly.
Where there it definitely has a impact on the price that you pay. But for your home, you know, those things I mentioned is really important for you to look at. Let's
get into the age factor now with regard to a car or motor vehicle insurance. There are different types, and oftentimes many South Africans aren't aware of which one might be relevant to them. Walk us through third party, comprehensive, as well as I think there's third party and theft.
Yes. So again, you know, insurance jargon, third party and theft really in simple terms, in layman's terms, mean that if you're in an accident and the other person wants to claim from you, then that's the third party. So your insurer covers you for any claim that arises from somebody that drove into you or you driving into somebody else. So that's third party. Then there's this fire and theft component, and we in the insurance industry use that third party fire and theft insurance. That's really if your car burns out or if it gets stolen, then you're also covered for that. So that's the first piece of an insurance premium that you can cover yourself for. So you can cover yourself for only third-party fire and theft. And then the second piece of the terminology is comprehensive insurance. And what does that mean? So comprehensive insurance means that we cover you for any incident that takes place with your car. So if your car is in an accident, the insurer will pay for the repairs on the car. If the car is written off as a result of the accident, the insurer will pay either the market value or the retail value of the car, depending on what you specified. So it's really important to look at what types of cover do you want. And then I think very important for customers out there, if you have vehicle finance, your vehicle finance house insists on having comprehensive insurance. Because you can imagine if the car is not stolen, but it's written off, so it's in an accident and it's no more of use to you, then if you don't have comprehensive insurance, you will still be held liable for the outstanding loan amount of the car.
Nobody wants to do that, to pay for something that you no longer have.
Absolutely.
Exactly.
Absolutely.
Let's get into the age element as well, which you mentioned plays a significant factor.
So age plays a big factor, not really because you're young or old, but because of the time duration of having a license. So through a lot of statistical analysis, we've determined that there's a direct correlation between the probability of actually making an accident and how long you've had your license, your driver's license.
So the need for speed is an eager feeling for those young and who are males versus their older female counterparts per se.
Absolutely. And also just the fact that because there isn't as much knowledge and as much time spent behind the wheel, the younger person don't have the same level of confidence when he or she is on the road.
Well, it's time for Practically Speaking. Now, this is the time when we get into our case study jar to actually get an analysis of practical examples. And Willem, you're going to help us with regard to certain answers here. So time for me to stick my hand in the jar. And we've got our first situation, which reads, my car was stolen from the driveway of my home. When I requested a claim from my insurer, they requested my car key. I only have my spare key. Will this impact my claim in terms of negligence?
So, very good question and an interesting answer. If you can prove that you did not hand your car key to the thief and there was no collusion involved, then there would be no issue and your insurance claim would be paid.
Tell us about that. Would one also need to obviously divulge the information to the insurer at the time of taking on the insurance that, look, I only have one particular key and no other spare key?
Absolutely. So if you divulge that information up front, it's much simpler, and then it's much easier at the time of claim to say, listen, I did do it. But if you don't do it, because, I mean, what happens is it's possible that you can lose your original key. Again, I mean, it would be quite advisable to phone up your insurer and say, listen, I've lost my key. And then in the event of an accident or a theft, that wouldn't be questioned. However, it's not that difficult to prove that there wasn't any collusion involved. Mm-hmm. So most insurers and at Hollard would look at the claim and look at the merits of it, and chances are you will be paid out.
Willem, now that we're wrapping up this conversation, the three major key takeaway points. I take it the starting point is obviously look at your risk profile and do a comprehensive needs analysis here.
Absolutely.
And then moving on from that one, reading the documents, understanding the terminology, which is often where many people go wrong, I take it.
Absolutely. People look at the quote, they take out the policy, they pay the first month's premium, and they actually never look at the policy wording. It is so important to read that document. It's a legal contract that binds you and binds the insurer, so you need to understand it.
Full disclosure as well in communication. And what about reviewing your claims? Not necessarily your claims, but the contributions that you make to insurance cover. I understand some of them decrease annually? Yes,
so some do. And it's always a good idea to look at your premium. But my suggestion and advice to the consumer out there is phone your own insurer first. Have a look at what you're covered for. Have a look at whether there's been any decreases in the values. Sometimes you find that you actually bought more things. And then look at what you're covered for in that. And then if you do decide that it's too expensive, obviously there's a huge market out there. Short-term insurance is really competitive.
It's just a phone call away, obviously, or checking online. Willem, thank you so much for your time today. Interesting insights that we've received, no doubt, when it comes to short-term insurance for your home and your vehicle. But that's it for the show this evening. Thanks once more to Willem Smith. He's from Hollard. Remember that we want to hear from you. So get tweeting or send us your comments to @CNBC Africa using the hashtag Finance410 or to myself @Kukumfupi. Until tomorrow evening, it's goodbye for now.